Kia ora and welcome to Shared Lunch, brought to you by Sharesies. I'm Helen Mattison. Today on the program we look at the takeover offer for Mānuka Honey Company and Kiwi icon Comvita. Shareholders are being asked to vote in coming days on a scheme of arrangement whereby they would receive 80 cents a share. That's a 67% premium on the last trading day before the scheme was announced. But it's no secret that the Mānuka honey industry has got its challenges. And in a moment, we'll hear from Bridget Coates, the chair of Comvita, as to why she and her board think taking the company private with this offer on the table is the best way to secure Comvita's future.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome to Shared Lunch, Bridget.
Thank you very much for having me.
Comvita is a household name here in New Zealand and probably in Australia too. It's been around for nearly 50 years. How has it changed since 1974-75 when it first was founded?
Well, in the early days, founded by two apiarists, Alan Bowden and Claude Stratford, way back 50 years ago. At the time, the medicinal qualities and the antibacterial qualities of Mānuka honey were not known. And during that time, they gradually built the industry, consolidated their operations, which were started down in the Te Puke area, and grew the company over the 50-year period until today. We're now in all over the world, and it's widely regarded as the premium honey that's available worldwide.
Yes, because you're in Asia, China, North America, Europe. You've got operations many places.
Yes.
So, and in terms of where do we stand, or where would we sit in the world in terms of Mānuka honey from New Zealand?
We're the market leader from New Zealand, and Mānuka honey from New Zealand is only from New Zealand. So we are the global leader, if you think about it in those terms. So yes, I mean there are other honey styles and other brands, but of course we believe that. And our many customers worldwide believe that this is a very special product.
It's also a challenging product to produce, from what I can gather. Can you tell us a little bit about the fact that it's only a few weeks of the year that the bees make the honey? It's in remote places. For someone to produce it and bring it to market, there's quite a bit in it, I'd imagine.
Oh, there is a lot. And as you can imagine, actually in common with many other agricultural products, there are various things to manage, on the supply side, and you can easily exceed the ability of the market to absorb the product if you have an extremely strong season, for instance, or if you get a lot of apiarists out there thinking that they're going to sell Mānuka honey product to the companies, to the export companies, then you can easily get an oversupply situation, and that has been our history in the last few years, and very, very much a part of where our problems have arisen.
So if we look then at Mānuka honey globally, the challenges, oversupply, pricing being volatile, just talk us through some of the things that have happened there.
Yes, we had an increase in hives from to up to 1 million hives from the normal level of approximately 500,000, and that took place in a rapid time frame. Left the industry, not just us, vulnerable to downward pressure on price, and to what you might describe as excess competition, discounting in the marketplace, promises about the quality of the product that weren't correct. Just generally sort of typical when you get an oversupply situation. Everybody tends to lose their maybe their legitimacy and start to really try and move volume because they're stuck with excess inventory, and it becomes a bit of a lax discipline.
So what are the consequences then for the industry with this sort of thing? Because it's been a few years that this has sort of been happening, hasn't it?
Yes, it has, but things have fortunately changed significantly, and we're now
Right.
back down to a more normal hive level, more sustainable. Our prices have adjusted downwards, but are stabilising.
Right.
So these things do
Cycles.
go in cycles, and so one has to, if you're running a company like Comvita, you have to be very very conscious of the cycles and adjusting to your strategies to suit the different phases of the cycle.
Yes, because Comvita has had significant financial pressure over the last little while.
Yes.
And obviously that's why the board and the management are thinking now that, we need to think of something else in terms of the future of the company,
Sure.
and obviously with the scheme of arrangement for shareholders thinking about the vote coming up.
Sure.
What has the management and board done to try and improve the situation financially, so that you can survive, that you can keep trading?
Yes. We started, I think, 2.5 years ago, seeking ways of recapitalising the company. There were a number of approaches. Some were debt-based, some were equity-based, some were take private options, such as the one that has that's in front of us at the moment. And we have been working extremely hard to find ways of strengthening up the balance sheet, positioning the company for growth, restructuring the company, taking cost out, reducing staff, which we have done significantly globally, and getting ourselves into a fighting fit situation. But having done all that and said all that, the situation is still not where it needs to be.
Right. So as much as many efforts were put into the reset, it can't actually be everything to solve the issues that you're facing.
That's true. And the necessity is that we bring fresh capital into the company to strengthen up the balance sheet, position the company for growth, and that is what the scheme is intended to do, of course.
Also, looking at the scheme that is before shareholders, obviously before they make any decision like that, they want to know what is happening with the trading. You did put out a Q1 update to the market a few days ago now. Can you just talk me through how things are faring at the moment?
Yes. As part of the scheme documents, we did have an independent reviewer, Grant Samuel, look at the company, provided a lot of information for shareholders, which is included in the scheme documents and can be, and there's endless information there for shareholders to absorb, which assessed both the trading conditions, the balance sheet situation, debt requirements, etc., and gave shareholders the ability to make the decision. And this is of course what we are asking shareholders now, to read these documents, consider the situation, consider their own personal circumstances, and vote.
So with that Q1 update, you talked about the fact that there had been a slight sort of uptake in terms of sales. I think it's kind of sounded a little bit mixed, because obviously the different markets, have their own idiosyncrasies. But you're sort of confident that things are, I don't know if stabilising is the right word, but it wasn't as perhaps as dire as maybe it had been in the past.
The key message from the announcement was that we're trading in line with the information that was given in the scheme arrangements. We have put a forecast into the document. In fact, there's a forecast for both the current year and the next year.
So if we look at the Grant Samuel, the independent advisor's recommendation, it talked, the offer on the table, first off I'll say, the offer on the table from Florenz, the bidder is 80 cents per share, right? The Grant Samuel report talks about a range of between 70 and 92. Yes. So you're thinking that it's sort of at the 80 cents is close to the midpoint of that range that the advisor is talking about, right?
Yes, exactly right. And, we are very conscious that shareholders have different preferences. Some require liquidity. It's been quite difficult to get liquidity in the company.
Yes.
Because it has been trading at a very low level. As you know, before the offer it was 47 cents.
If the scheme were not to be successful, where does that leave Comvita?
with a balance sheet situation that needs addressing. That's the long and the short of it, that we still have let's say the situation that led us to this, to recommending this to shareholders, is still in the same as it was before. So we would need to find quickly ways of addressing the balance sheet weaknesses that we have.
Do you think you could?
It's the responsibility of the board to do absolutely everything that it possibly can.
Does sound like quite a hurdle, though.
You know, if these things were easy, it would have happened before now. So yes, exactly.
So this is the offer that's on the table from Florenz, is the only credible superior offer that shareholders really can consider at this time.
Yes, we have not had any offer from other bidders of any kind, shareholders or non-shareholders. As I say, in the past, we have had 3 or 4 other bidders who've looked at the company and considered offering to buy part or all of the company, and for one reason and another, they have not proceeded. So that is that we have Florenz. The Florenz offer is the only offer on the table at the moment. Correct.
So if we look at Florenz, then it's as I understand it, a number of companies and brands in the health and wellness kind of arena. It's private. And they even have a Mānuka honey brand, Weatherspoon, I think, which is an organic one. Mm-hmm. So where does the board see Comvita going? If this is successful, this vote, and Florenz does take over for 80 cents a share, what future do you think it will have for Comvita under that arrangement?
So first of all, the intention is that Florenz should take the company private, so that would be 100% owned by them. But one thing I think we can be certain of is that, you know, Mānuka, Comvita as the market leader in Mānuka honey, has a very strong market position, a very attractive market position. So one would imagine that they would, that as far as customers and our current employees, I think they can be confident about the future. Although, as I say, that is entirely up to Florenz and how they see it in the longer term.
But in terms of the brand, I mean, it's still New Zealand owned. Is that something that was important?
Yes. I mean, at the end of the day, we're responsible to shareholders, and we're maximising shareholder value, and that is the primary driver for the board.
This is a pretty critical decision for Comvita shareholders, whether they vote, whether they decide to vote, that there's a bit at stake here.
Yes.
What do you say to long-time loyal investors who, you know, have been watching the stock for a while, have, you know, perhaps made losses and the like? What do you say to them?
I would like to give them an assurance that the board has done absolutely every single possible thing it could have done to address the situation. The situation has arisen in large part because of what's happened in the industry and with some of the pressures globally, and in some measure because of the boards not reacting quickly enough to the situation as it changed. So certainly accept our fair share of our responsibility for that.
Bridget, what does the scheme offer shareholders in a nutshell?
Shareholders are being offered an alternative for the value of their shares, being paid 80 cents a share. Should the scheme be approved, of course, by a 75% majority, they will receive that money, and their shares will be removed from the market. And if they choose not to, then we will continue operations, and we will be working hard as a board to find alternatives.
Thank you, Bridget, for joining us today.
Thank you.
And thanks everyone for tuning in. You can watch Shared Lunch on YouTube or follow us on your favourite podcast app. Leave us a rating and tell us what you'd like to hear next. Mā te wā.